Hey, Isabel. All right, and we are streaming live.
All right, awesome. Well, thank you for joining everybody. I'm really excited about today. Today we have Bob Cooper, who is our account executive at Cress Insurance. He has more than 30 years in the industry, and so he's a wealth of knowledge and experience. So we've had him come talk to us before, and he's always a hoot. He doesn't think he's funny, but he is funny. He has just very dry sense of humor. Um, but he's a proud dad of 4 kids and a grandpa to 6, and doesn't get to see them enough, but talks to them every Sunday. But we're really glad you're here, Bob, and we're excited to hear what you have to say.
Yeah, yeah. And she didn't have the courage to bring up I'm a surfboard during
Oh
the
yeah,
summer. I do a lot of body surfing.
right.
Only advantage to living in California anymore. Everything else, well, and the weather. Everything else is a big disadvantage. My name is Bob Cooper. I was the original employee at Cress. I have been here. It'll officially be 30 years in January, so I lied to Holly just a little bit. But I do have more than 30 years experience because I worked at other companies before and taught insurance for about 5 years. So um, uh, as I have found in this industry, it's really good to specialize. So if you're in Iowa, don't call me about insuring your farm. Don't call me about hurricane and tornado insurance. My grandpa is buried in Des Moines, so I was as a kid I was in Des Moines fairly often. But all I do is talk to real estate agents and brokers. Yeah, you got any mortgage originators that need coverage? I do a lot of that too, but it's real estate industry so that I can learn it, get to know it, and uh, I do enjoy it. And as I told Holly, I got 2 years left, and I'm gone. You can't call me about anything. You can't call me about your E&O insurance, the seller protection plan that we're going to go over here in a little bit. Um, uh, but that's kind of a brief narrative about myself and my experience in this business. Now, um, getting a little bit more specific, real estate agents, you are the second most sued industry in the entire nation. And The number one is medical. And maybe that's one of the reasons why my son became a doctor in the Navy, because they don't have much liability and all that's covered. But what happens is in this industry is you do a real estate transaction, and if something goes wrong, then oftentimes it ends up in litigation. Okay, so we don't want to do that. It's the first thing you think about when you get up in the morning, or the last thing you think about when you go to sleep at night, and that's if you can go to sleep. And so every year, brokers need to make a decision about how they're going to protect themselves and protect you. If you're a commercial broker, a lot of them decide they don't want to carry coverage. They can't make a mistake. They're so good that I've just found that's their attitude. Well, your company does carry coverage for commercial, so you guys can do commercial. But as a statement, because one thing I really want to get into today, and I do this just about every meeting, I've done this before. You are required to have a real estate license if uh, if you want to represent others for a fee. And coverage is great. She has you guys as a company have about the best coverages that you can get for but then again, that's representing others for a fee. Where you run into trouble, is when you start doing self-dealing. Okay, self-dealing does not require a license. You can buy real estate, you can sell real estate, you can market real estate, and not have a license if you have ownership in every state that I work in. Okay, so if you are doing self-dealing, you have to be aware of what you can do and what you can't do and be covered. Number one, all policies exclude when you are buying a property. So if you buy a property from a little old lady who bought the home for $10,000 50 years ago, and she feels really lucky now getting it for $20,000, and you buy it, and they sue you because, and I was kind of in this position once myself. I spent 2 years living with my parents, and my parents owned some oil rights in North Dakota. And some guy offered my dad a certain amount of money for it. And he thought, oh boy. And I just happened to answer the phone one day, and I found out the offer was at least half of what it was worth. And all the solicitations he received, it made it seem like that person was a fiduciary, but he wasn't. And I even told the guy, I said, you're lucky I took this phone call, because I would have found the doggest attorney. You kind of represent that you're a fiduciary, and you're not. So I want to warn you, when you're buying a house, there's no coverage. You are acting as a principal. This is to cover you for when you have a license. Now, that being said, being in real estate, sometimes you sell your own stuff. If this is a home that you have lived in, if this is a home that you own, and you've had it for a year or more, as long as you do certain things. Okay, well, first of all, I'm going to recommend you do all things. But to have coverage, you have to have disclosed that you have a financial interest. Okay, so there are conditions. You have to meet that condition. You have to disclose it. You have to have all state mandated disclosures. So that could be different in every state. There's transfer, they have seller's disclosures, they have transfer disclosures, so there's certain disclosures. If you do that, okay, with your policy, those are the only 2 requirements. Okay. Now, with this type of insurance, it's not the policy you have now, it's the policy you have next year, if the claim comes in next year. So I recommend that you do all things that a carrier might require. Okay. As an example, although this is not yours, I highly recommend you have a home inspection done by a qualified inspector. And you can argue about what's qualified. If it's your dad that owns a truck, probably not qualified. If they have a general contractor's license, I don't see how they could say that that's not qualified. If they're a member of an accredited organization, CREA, ASHI, NASHI, InterNACHI, if they're a member of those, I don't see how the carrier can argue that they're not qualified. But so it's a qualified home warranty, a home inspection. I recommend you do a home warranty for a couple of reasons, because some companies require that. And at least get a waiver if they don't want to do it, because, well, some companies say must have a home warranty. Some companies say must have a home warranty or a waiver. So I would at least get a waiver. I would at least, if it helps the sale and or some of the other benefits, then you might want to go ahead and just place a home warranty, because it can lower your deductible and meet a requirement. There is one company, so let's just say that you guys get into claims trouble and I have trouble finding you coverage. There's one company that requires someone else in the company sell it. You can, guys, it doesn't say what you do about commissions. It doesn't say, so one person, Holly can represent Sandy, or Sandy can represent Holly. They can have agreement between themselves. You might want to meet that condition anyway. So just be aware that the conditions, this policy might change a year from now, and you can't go back and say, I just went through this discussion with someone, but I didn't know. I go, that's true, you didn't know, but those are the conditions, and that's what it will fall under if that happens. Those are the conditions we'll have to meet if that's when you're sued, a year, 2, 3 years from now. After 3 years, it goes down precipitously. Now, something else that's going on in the industry is, and I've literally taken 3 calls on this within the last 2 months. But people are starting to assign contracts. People are starting to wholesaling, wholetailing. Okay, that gets back into the self-dealing, and you have to be very cautious of coverage. Um, uh, so I don't know if any of you are doing that. It's high risk. It requires a lot of money, um, uh, to come up with the contracts to do that. Also, if you are flipping a home, all 100% of E&O policies have exclusions in them for construction and development. So if you buy a home and you never live in it and you only own it for 3 months, if you do paint, that's fine. If you do carpet, that's going to be fine. But once you start adding on rooms, once you start having to get permits, those exclusions can kick in. So if you are flipping, be very, very cautious about what you do, and make sure you meet all the requirements of the agent-owned property. So, in fact, I just will tell you that if you do construction and that there's a construction defect suit, even with the protections for agent-owned property, it's going to be excluded saying you did construction, because that oftentimes is the complaint. So use qualified general contractors. Make sure that they carry liability insurance, and that way you can always go after them if it's a construction defect suit. You're doing it yourself, you're putting yourself at a much, much higher risk of something happening. So so that's all the bad stuff. That's all the bad stuff. Um, uh, if there's any, before I move to the next step of this, does anyone have a question yet on anything I have brought up?
Absolutely, Bob. I want to say thank you for being here. We do appreciate your time and your expertise. My name's Lindsay, managing broker for Texas. I wanted to real quickly ask you some questions about, sometimes we do have agents that want to represent themselves in the transaction for purchasing a property. That's a great deal. You had mentioned that E&O coverage doesn't cover the agent if they're representing themselves in a contract. Is that the way that I understand?
Well, definitely if they buy. If they buy, there's going to be no coverage. Okay. If they sell, okay, there could be coverage. Oftentimes there will be. Okay. If they are representing themselves on a property they general contracted, and you get a suit that says, construction defect, they're going to immediately decline that claim. Okay. So the only way they can protect themselves is to hire a general contractor that has general liability, and they should get a certificate of insurance and or get themselves named as a, well, keep it as certificate of insurance so that they have coverage, because there's 2 ways to get covered. One, have a policy to cover it. 2, pay people that have the coverage that you can go after and sue them for any damages but if they're doing the work themselves and it's a construction defect suit, you got a problem.
So the second part of my question is, okay, so we have an agent that goes and buys a property for themselves and we end up in litigation. Are you saying that the brokerage itself is not covered as well with
Yes.
on that suit?
Yep.
So what type of, in your experience, what do you see brokers doing? Do they have some sort of disclosure notice to their agent? What, in your experience, how have you seen that handled?
Well, it is possible do you have someone that does a lot of that?
Bob, did you break up? Guys, I'm not sure if that was me or him.
Yeah, you're actually breaking up a little bit on me. Can you hear me? Holly, can you hear me?
Yes, let me switch internets real quick.
Yep.
Okay.
Yep. I think it's usually just one-off situations, whether people are buying their own primary residence, but we always have, an agent where that's their entire business model, right? Is buying a property, fixing it up in some aspect, and then turning around and selling it.
Yeah. Well, if it's a one-off, that's one thing. If you have someone that's doing that constantly, is you can get if there's someone that's doing it constantly, there are policies out there that are for real estate developers. I've only sold 2 in 30 years. I've got one guy here in California that I'm having trouble finding coverage for this year, but they bought a developer's policy. They have $100,000 deductible, and they're paying $15,000 for that. I'm sure I could find something in Texas that would be cheaper, but not a whole lot. They'd probably have a high deductible, 10 to 20,000, and 10 to 20,000, deductible, maybe 25,000, and maybe $5,000 to $10,000 in premium a year. They'll ask questions about their qualifications, but it would be a developer's policy as opposed to a real estate policy.
Okay, I do understand. I do understand that. So urging the agents to get their own policy for coverage. Can you hear me okay, Bob?
I can now.
Okay, perfect. The reason we ask is because our company actually does offer unlimited personal deals, but making sure that we're covered on our end as far as, there's a lot of exposure there. So how can we, mitigate that risk?
The only way to mitigate the risk is, I have over the years, I'll have, people talk to me about high risk transactions, and that's probably the most common question that comes up. The only way to protect yourself is to get a developer's policy. So I don't know if you have a whole lot of agents, if they're all separate entities with no common ownership, they'd probably require that they each get their own, and that's going to be another cost. So over the years, like as an example, something else that's excluded, so we can get something added if you have the experience and they ask a lot of questions, business opportunities. And I have a guy, it's in California, and I actually went out and did a presentation to the agent. This broker was getting up, man, we're going to make a ton of money in business opportunities. And I pulled him aside afterwards. That's really high risk. I can get it covered, but it's going to add fairly significant premium, and you have to and he's had like 3 or 4 business opportunity claims, and I can't find coverage for him. No one, they'll say, we'll cover all the other stuff. We won't cover business opportunities. So you kind of have to make, and I told him, I said, you're going to get people in here that specialize in that. It's high risk, and there's a lot of times it's not going to be covered. And if you have people, now, and I'm working with a guy in Texas. He actually got it covered, but he had a guy flip a property. They paid out $200,000 and some on behalf of that agent. How, I read through the policy they had, how he was covered, I don't know, but because it was construction defect, and maybe it was cheaper for the carrier just to pay $200,000 than to fight a bad faith claim settlement. But his premium in Texas, and they were specific about excluding these people, went from 23,000 to 80 some thousand, and they specifically excluded that activity. He had to get rid of about 8 or 9 agents because that's all they did. So, you have to determine how much risk, and this happens all the time in this business. I can't tell you how many calls I took about 2 years ago when you guys had that antitrust lawsuit for the realtors. Not covered. We don't cover, insurance companies don't cover illegal activity or things that are, against the law. So that $2 billion or $2 billion plus that the realtors had to pay out, they had to pay that all themselves because there was no coverage for antitrust. And building, self-dealing doesn't require a license, high risk. Most carriers limit coverage on that.
You also mentioned a lot of this comes, I run the special divisions section of this company, and we actually have a division that's investors and acquisitions. So you had mentioned assignments and things of that nature. Could you go into a little bit on policy coverage and kind of some do's and don'ts?
Okay, well, I'll tell you that again, high risk activity. You'll have to buy a. I'm literally getting ready to sell one of those policies now. That's all they do. They do about 350,000 in activity, and the minimum premium's 4,000. They're getting ready to pay $5,000 for a policy with a $10,000 deductible. That would have to be insured separately. It can be done. Again, high risk, but it can be that one can be done. Purchase contract agreements and assignments, all that can be covered. And in fact, they'll even this carrier is covering properties acquired and resold within 12 months. So it's something we can do. It would have to be a separate policy. Most carriers will not do that. I only have 2 companies that are willing to consider covering that.
When you say that, though, if I recall from our previous conversation, that's if like the agent is doing that, not necessarily if they're representing a client with an attorney in fact situation.
Send me an email. I will check with our coverage counsel. So send me a agent. In fact, I don't think that's going to be a problem if they're an agent in fact. But I want to be certain.
Yes.
Because they're not representing themselves, they're not having a financial interest in it. But I will check with our coverage counsel.
Great. Lindsay and I will craft an email and send it over.
Okay. Yep.
Thanks,
Because
Bob.
here's what I can't do.
that.
I can't predict what the attorney is going to sue you for. I can't. So if something falls outside the bound, because all you have to do is be sued for construction defect that you did. That could, again, it would have to be the agent doing it. That will kick in an exclusion. But send me an email and I will talk to our coverage people on it.
Thank you, Bob. We appreciate that.
Yeah. So
one of the conversations we had that agents want to hear about, and I think Damien had a great question I forgot to ask you, but is about emails. So we have the company email with the 2-factor authentication, and I know we have the extra coverage for, I can't think of the name of it, but
cyber.
Cyber. We have cyber insurance for that. So, a lot of agents come into the industry. They've been told, time and time again, like, don't use your company email, use your personal email, or it's a pain to change if they switch companies. But we had a conversation about that and how it's really for our cyber insurance to really cover and help protect the agent in instances of like wire fraud and other things. They need to be using the company email. So can you talk about that?
Yeah, well, here is my concern. I again, I haven't looked at your application, but if you warrant or put on your that you have this available, that's could be the problem with that. Yes, we have 2-factor authentication, because I did have a claim probably about 4 years ago where the 2 email addresses you don't want to use are Yahoo and AOL. This was an agent that had an AOL account. He got hacked and $100,000 was stolen. And the company tried to deny it. But we got coverage counsel. We actually got coverage counsel for them. And what they did is they called the attorney up and said, look, we will pay you $30,000. Otherwise, otherwise we're going to deny the claim and you can just fight them and try to collect it yourself. That's what happened. And the guy took the $30,000, even though $100,000 was lost. So I know it has been covered in the past. I don't know, back then it was 4 or 5 years ago, it was a different ball game. The application was 1 page. Now it's 3 or 4. And, They want to know what you're doing. And if you say you're using multi-factor authentication and um, uh, and the agent's using multi-factor authentication, which I've been told, because I've been in a couple seminars on this, that Google will give it to you for free. Let me see. Okay, this is going to require me to navigate somewhere with 3 screens. Hold on. Let me look at who you are with on that. My real estate company policies. And you have 2 companies, so it's making it a little bit. Well, I will get back to you on that. Trying to navigate 3 screens and 2 different companies, because you own 2 different companies. A little bit difficult. So let me.
Fair.
So, blast from the past. Okay. Is that a question? Or is
No,
that
I found the little AOL dial-up, when it did the,
Yeah.
yeah, like back in the day.
Yeah. If you have a Yahoo account or you have AOL, be wary, be very wary. Those are easier to hack or have been, and we get more claims on those 2 than we do on any other. So,
That's good
anyway.
that's good for our concierge team to know when they're onboarding agents then too. But Brennan, you have a question?
Yeah, Bob, quick question for you. It kind of ties to that. But first thing I want to tell you is I love the name because my son's name is Cooper. So super
Yeah.
cool there.
Yeah, my brother had 8 daughters, and his second daughter finally had a son, and so they named him Cooper as well.
Nice. Love it. Love it. But kind of tied to that email question, we're building out our teams division, and included in that, we want to be able to offer white label services to some of these bigger teams. So they come over as brokerages. And this might be part of the conversation that you need to get back to. But in that case, I just wanted to know how insurance would work for a brokerage who is using their own branding, which might include their own email domains and everything. They're within my real estate company, but they keep their branding and their domains and stuff like that. So how that would work for insurance.
Okay. The way insurance works is there's the named insured, my real estate company. And there then are insureds, meaning any agent working under that license is an insured. Okay. So a claim comes in if they're suing, the white label company. It probably would be best to get it named as an additional named insured, so that they can't deny a claim saying, wait, this is a completely different company. If it's owned by my real estate company, or working under the scope and authority of that license, we won't have a problem. But white labeling, because I've not gone through a lot of white label in real estate, but I have gone through a lot of natural hazard disclosures. I don't know if you know what they are out there, but they're huge in California. Everyone's white labeling that, and because they're separate companies, have to get their own insurance. So we've sold a lot of white label, errors and omissions insurance to natural hazard disclosure companies. So we'd have to look at who is an insured, who has ownership, because you could, if they're not licensed under my real estate company, there could be an issue.
Well, they will be licensed here. We will be the broker of record. They'll just keep their personal branding.
Okay. Will they, so they'll be licensed under, so right there. Now, the white label, I'm just trying to think of potential scenarios that I might have seen that could cause a problem. If there's a separate company, a separate entity involved, and they get named in the lawsuit, and it's a separate company, which my real estate company has no interest in, that will not be defended. And they would end up having to defend that. So they would be defended as an agent. My real estate company would be defended, but if it's a separate entity, separate ownership, we would need to get them named as an additional named insured, which might add a little bit of cost to do that.
Okay.
So, white labeling often means separate ownership.
Okay. Thank you very much.
Yep.
Hey, Bob, I
Yeah.
wanted to ask you, we have a lot of agents here, independent agents, and they work with our company, obviously. But what are some common maybe tips that you see in some of these errors and omissions claims that, are just really simple everyday tasks and tactics and being mindful of to make sure that they stay out of hot water?
What I will do is I will send you, we have a 10 do's and don't list. It's really 9 because the number 10 says do carry errors and omissions insurance. But it's the most common claims that come up. And I can send you information on that that can be disseminated by disseminated. And by the way, another benefit that you guys have, because I kind of got off script here a little bit, is you do have in every state, don't guess about what you're going to do if you're in a sticky situation. Talk to the broker, whoever your broker is. And if they don't know, they have the right to call our company. We have a risk management line, and we guarantee during business hours to get a call back from an attorney to discuss the issue within 4 hours. And they'll even on the weekend, 8 business hours on the weekend. So if you call on a Saturday, you might not hear back till Sunday, but you have risk management services included with the policy. And I will send a list of the 9 technically most common things that come up and ways to avoid them.
Hey,
Does that
Bob,
work?
I found that list, Bob, that you've sent. So I'll make sure.
Okay.
Yeah, everyone has that.
Okay. So,
And I just want to endorse these the risk management legal team that our brokers have access to. These attorneys are amazing, and I know the best attorneys in Iowa, and they have connected us with those attorneys, so they have really good attorneys on call essentially. These attorneys have drafted up a form or done something to additionally protect our agents. So do not be shy about tapping into the risk management services that we already pay for.
yeah, and with that, and she is right. It is we'd rather pay an attorney $200-300 than we'd pay $1 million on a quote. Okay. However, it's not for training, and we want you to go to your broker first because, chances are the broker has seen, 1,000 transactions and might already know what to do. But if the broker doesn't know what to do, then, draft a form, read an agreement. So, yes.
Awesome. I uploaded that 10 things to do and not to do. So
There you go. That's
Bob, we actually had an agent join because of that. I was streaming a training and I was like, I don't know what situation we were talking about, but the agent had commented on our Twitch stream, yeah, I was in a similar situation and I approached my broker and they didn't know the answer. So they were just like, I don't know. And I was like, you will never, ever get an I don't know from us. First of all, we hire very, very smart brokers who have been around the block several times, but also we have access to a legal team that will get you an answer. So that's something I'm really proud of about our brokerage. And thanks for, keep those services because we use them and we love them.
Yeah, yeah. I don't want to. I do not want to undersell it or oversell it. I will send you. In fact, you can share it or not if you want, because if it's like as an example, one of the things they will do is they'll add, they'll try to determine it's not a claim first. So a lot of people want to try. Well, I don't want to turn in because I don't want to pay my deductible, and when it's actually a claim. So use it wisely and we'll be able to keep it.
Awesome. Can
Yep.
we see we love having you. It's already 10:35. But can you dive a little bit more into the seller protection plan that we
Yes.
have for our agents?
Okay. All right. Seller protection plan. Something you guys pay extra for is we've added an endorsement to your policy called the seller protection plan endorsement, which means that if you are representing an owner occupied dwelling, must be owner occupied. It cannot be an investment property. It can't be a bank owned property. It can't be new to construction, but owner occupied principal residence in any state, they get $25,000 coverage for 180 days after the close of escrow. Now, I am a real estate broker in California, and I'm very familiar with the product, and I have an insurance license, so I can talk about it more than you guys can. Okay. But don't step outside of your box, but it's an awesome tool. What I do is I go to, in fact, my neighbor right across the street who's been there longer than I have. I've lived here 36 years, 37 years. They're getting ready to sell and move to Tennessee. It's a common occurrence in California. I said, look, I have, and I don't compete against my agents. I say, look, I work with agents that can give you peace of mind. If you do not, now, I see that you put in the chat two $50,000 seller protection plan certificates. I think I sent you a $25,000 certificate, but that's a certificate that you guys have access to any owner occupied property. Okay. They get that no matter what. If it's owner occupied, you don't even really have to send it in. It's good for 180 days. Did I send you 250,000? Holly?
I'm verifying because it says
That's the one I see.
Yeah, it says 25,000 on the fly and the name, but when you open it,
Is
it's
there one where like if they're using the the home warranty, isn't that like up to
Yeah,
75?
I'll get into that in just a second.
Sorry, Bob.
That's okay. That's all right. It's a good question, and I'm glad you asked it because I'm getting old, and it's gonna remind me. Okay, let me get you the 25,000. Sorry, I'm navigating 3 screens. It takes me a minute. Okay, let's go here. Then we'll go here. Attach. Okay. I think I sent you the right one. Let me. Yeah, that's the right one. Okay, the one you're about to see is the one that you can give to anybody that has an owner-occupied residential property. So they can get $25,000, and you will see at the bottom is an attachment that within 14 days of the close of escrow, you can send this in with any type of closing statement that shows the date that it closed. They will know, and you send in $100 with it, or the seller does, either one. They'll extend it to 360 days, but it got to be sent within 14 days, and you send $100. $100, and I see someone wants to put in a listing packet, just be aware, and I've said it 10 times because I know I'm being taped. It must be it must be an owner occupied property. Number one problem that come up with, so I make sure I say it 20 times. I've had, and it's not a vacation home. I had that come up about 4 years ago. But I vacation there, nope, it's your principal residence, owner occupied. That's only happened once, and they threatened to get an attorney. Say, good, spend $50,000 on an attorney to get $25,000 coverage. Is going to be denied. But anyway, so I said it. It's there. So that is available to all your owner-occupied properties. Now, in addition, and I sent Holly, and I might have been the first time that I sent this to her, but well, no, because I know, and unfortunately, now, first of all, we're huge in Texas. So the Texas manager, sorry, I don't remember your name, but yeah, all three of our companies, Old Republic, First American, and Old Republic, First American, and Fidelity, all have qualified home warranties. So you can tell your agent, please, please call your rep and get the Crest brochures. They'll have our label on it. So it's kind of white labeled, kind of not. It's just, but they get 13 months coverage instead of 12. They also, it's on there twice. There's the seller protection plan certificate for $50,000 that you can use, and they can be stacked. So if you have a multi-million-dollar listing, you can tell them that they can have peace of mind. Now, as a licensee, I can do what you can't do. So what I have learned is, I go across the street, and I don't have this come up anymore. I say, look, I'm a licensed broker. I do not represent people, but I do refer people out. And I get I get probably once a year a nice $3,000 to $5,000 referral check, because I refer it out to people. And I say, look, if you use my broker, you get this automatically. You get this peace of mind for $25,000 for 6 months after the close of escrow. And if you use my guy at the end of escrow, I will pay, now in California, it's $200. I will pay $200 if you use my broker to cover you for 360 days, and that you have that peace of mind. I have found when I use the word peace of mind, I don't get a lot of questions. If I use the word insurance, if I use the word coverage, and I accidentally used coverage, by the way. Yeah, if I use the word coverage, they say, well, what's covered? How do I get it covered? Well, what if your response is, as is mine, if you look on the second page of the attachment, you will see, say, I'm not an insurance person, but this is the best thing we could find on the market. And again, I don't use the word insurance. This is the best thing that we have found on the market. And they kind of give you a guideline of what's covered and what's not covered. It's upside down, so you'll have to, rotate it. But it will go through a list, what's not covered, earnest money deposit, close of escrow, things that happened before the close of escrow. So if you if you pay $100 for the $25,000, they get $25. You pay an additional $100, they can be covered for 360 days for $75,000, because it is stackable. Peace of mind. The best thing we can find on the market, because there's only one company that has something similar to it, and it's not, it covers less. So it still is the best thing on the market. There's only one other company that has something like this, and there's no additional with the home warranty. But two things you have to get, if you do not have to turn in that slip of paper if you're just using the guaranteed amount. They can call and I had someone call in a couple weeks ago, 179 days after the close of escrow. And so they got it turned in just in time, and they never turned in that certificate. If you want to extend it to 360 days, you got 14 days to get it in. Because sometimes people call me 7 months, 8 months later. Well, we decided we wanted to extend it. Sorry, it's a little bit too late. And I've seen it posted here twice, but unfortunately, you guys don't have many states where we have the qualified home warranties. However, your policy, any home warranty will lower your deductible by $2,500 if it's licensed by the state. Service plans don't work. So if you place a service plan, it has to be licensed by the state, however your state licenses, and it becomes a home warranty that will lower your deductible by $2,500. In Texas, if you use a qualified home warranty, waive up to $5,000. Are there any questions about the certificate?
Hey, Bob, would it be possible, this is Lindsay with the state of Texas, would it be possible to do a Texas-centric class since we kind of have some additional items that we cover here in Texas?
Yeah, I can do that. Sure. How many agents do you have?
We have 6.
Okay. When you get to 20, I can actually request your own personal risk management seminar for Texas. But yes, I can talk about this. I mean, there's not really much that's going to be new other than you have all 3 qualified home warranty companies there. So, but yes, I will. If you want to do that, we can do it.
Thank you, Bob. We appreciate you.
Yeah. Any other questions about that? No?
No. Anyone have any questions at all?
Yeah, I'd be happy to answer any questions that I can. So,
is there a marketing piece, or does it state on one of those documents where you said the 3 old Fidelity, Old Republic, and I forget the third one?
You'd have to go to them for any marketing they have about their, because people call it, well, if my dishwasher breaks, am I covered? I don't know. Call your home warranty rep. But I did send, I did send what states are qualified, which ones are. So you would call, if you have a favorite. A lot of people like Fidelity, a lot of people like First American, but I would call that rep and say, hey, because I know Fidelity has gone above and beyond in their marketing for this. I have a direct line that their VP is awesome. I can have him contact you direct, or have him have their rep call you direct, and he would know about their marketing pieces. So, and in Texas, it might do you some good. So you want to send me an email?
I will, Bob. Thank you. I'd like to put a packet together for our Texas agents since we have a little more details than that. So I appreciate you for that.
Okay.
Thank you.
Okay. All right.
Go ahead, Sandy.
Bob, the biggest thing that I learned from you the last time you were here talking to our agents, and forgive me because I came in a few minutes late, so I don't know if you actually had a chance to cover this yet, but the biggest thing that I learned from you last time was never give up anything without getting something in return.
Yeah.
Can you talk about that?
Yep. Okay. As part of the risk management, this is big. This is big. You guys work hard. You spend a month, 2, 3 months closing a deal, and all of a sudden, someone comes back. Well, there's a leak in the bathroom, and I want you to pay for it. In the insurance business, we call that a commissionectomy. It's a medical procedure where they want to take money from you. And sometimes it's the easiest route. It's the best route. If they want less than what your share of the deductible is, it is always the best route to give them money. However, never give something without getting something. And our attorneys will write up for you at no cost a settlement and release. Each state is different. In the state, in whatever state you're in, like in California, they can't get a general release except under very certain circumstances. So if you, in your state, you get a general release, meaning I give up $2,000, but then they agree never to sue you for anything ever again, that's the best. Second best thing is a specific release. Okay, I'll give you $2,000, but we're done with this issue, and the attorney will write that up. The attorney will write that up.
Thank you so much, Bob.
Yep.
Worth its weight in gold.
So, yeah, First American, yeah. So, Fidelity National, it's not Fidelity Nation. Just, because you do Fidelity Nation, it might give you, some completely different, Google. But all right, settlement and release. Anything else?
Bob, I could keep you here all day. Don't ask that question.
Well, yeah, no, it's a lot to take in. It's taken me a long time to learn stuff, and I get new claims in where my head just goes, oh, we don't know. So anyway,
Flip that, Brian.
yeah, and this new stuff coming out, wholetailing, attorney in fact, I don't think there's a problem because you're not don't have a financial.
That's the first time I've heard that term, wholetailing.
Yeah, I just heard it 4 weeks ago, and so learning about it. So anyway.
So there was a question about the settlement and release. I remember last time. Is that something where we can have a generic form for that? Or is it literally each time we need to call the risk management, get connected with the attorney, and then have them draw it up?
Well, the answer to that is we actually have a generic one on our site. Okay. So if they're giving up $500, you might not want to bother an attorney with that and delay things, because attorneys are busy and they'll take the call within 4 hours. However, if you want them to draft a letter, it could take 2, 3, 4 days. Now, I'm very, very, very close friends with one of our attorneys in California. And one time he took me a week and a half before he got me, because it was a big deal. And he had to write up about a 4-page settlement and release, because it was I was just the referral agent on it. And I'm going, man, have I got a problem here, Rob? So we have a generic one on our site. Now I'll see if I can't get a copy and send that to you.
Great. That would be good for the brokers to have for sure.
Okay. Yep.
All
Okay.
right.
Okay. Unless you guys have anything else, I am done.
Bob, I have one more question. I just wanted you to maybe elaborate on what you were talking about. Can you give me like a better example of, in the agent scenario of the client, like, I want you to cover this, or, take this out of your paycheck. Can you give me like another example? Because we're seeing a lot of this go on, and I love the fact that we have a little more coverage here. Could you maybe give me a few other examples, especially with some of these agents on the line, that we can use and kind of highlight when this comes around to our office?
Well, I'm not 100% sure what you're asking. Risk management services, you can call. They'll give you up to a half an hour. After that, you might be charged. They will write letters in order to prevent claims. So you bring up a scenario where, you don't understand something, or there's a confusion. The attorney, if they get a letter from Holly Brink broker, they go, well, okay. Okay, because I was involved in a dispute and I sent a letter. They didn't say anything. Now, this was outside of Crest. This was a personal deal. So I called the attorney that I'm really good friends with. And he wrote, instead of my 1 page, we have an issue here. He wrote up a 4-page, we're going to do this, do that. And it just has more impact. Even if it's a 1-page letter, if you have an attorney letter, it's going to, if you have an attorney letter, it's going to just have more impact. Okay, these people are serious. They're not just, it's not just Holly Brink broker. Lindsay, are you the actual broker for Texas?
I'm the broker in Texas.
Was that?
Absolutely. Yes, sir.
Okay. So you call and and they'll write the letter if it's to prevent a claim. Don't call us about your toaster. Don't call us about your divorce. Don't talk to us about because I had someone call the hotline. They were way out. They thought that they could call an attorney and get anything. She wanted to see our attorney to write a cease and desist. We said, yeah, you may hire him personally, and maybe he'll bill you at insurance billing rates, but we're not paying for that. We're not going to do that for you. So we're not going to do a cease and desist for you. And when you send me an email, I will send you more specifically about the times they might tell you, no, that's not this. So the biggest one is you want to try to have risk management take care of a claim. No, they're going to say, no, you need to turn this into a claim, pay your deductible, whatever's due, if anything. And then, the second biggest thing, if it's outside a real estate transaction, third biggest thing is training. We have brokers that will have a caller attorneys. Well, I need them to teach someone how to fill out a transfer disclosure statement. No, I need them attorney to train them how to fill out a purchase agreement. We don't train. We don't pay for anything outside of a real estate transaction, but you will know before you're going to be charged. Lindsay, do you have my email address?
I can get it from Holly, sir. We appreciate you.
Okay.
Thank you.
So,
Bob, I do
okay.
not think that I undersold you one bit. You were just every bit as great as last year. We really appreciated your time.
Yeah, of course. Do whatever I can for you. So,
Thank you, Bob.
all right.
Thanks, Bob.
Thank you.
All right.
Bye.
Thanks so much.
Hey, Bob.
And navigating to my third screen here. Okay. Now I've got to go this way. Come on. Where'd you go? There we go.
Yeah, I don't think he's allowed to retire. Okay.
Let's put Bob in the waiting room.
A play-by-play.
Yeah.
Awesome.
I love Bob. He's just amazing. I've never had such an amazing, well, then again, until I owned a brokerage, I never had to coordinate directly with an E&O rep, right? But I truly believe, you guys, that we have the best E&O coverage, but honestly, this is so much better than any brokerage I've ever been with the perks that the E&O coverage offers. And you guys, just to be clear, he didn't make it super clear, but you don't have access to the risk management line. Only a couple of members of our company, they really lock it down. So the brokers have to go to, leadership and be like, hey, we need access to these attorneys. Like, this is a serious thing that we can't resolve on our own. And that's why there's the chain of command with that. So
Listen, this coverage sounds so good. I feel like I can just go out there and just say shit. Just say whatever I want. I know I'm covered, I'm good.
Not do that. Brad, don't be giving agents any ideas here.
I love it.
Just kidding.
Oh God. Let's really test its limits and see.
Great. Love that for us. All right.
Holly, close us out.
All right. When in doubt, reach out, message us if you need us. We are here for you. We all started this morning with a blank slate at 0. So go out and talk to a buyer, a seller, or an agent today. Have a good one. Bye.
Bye.
Bye.